Good morning, everyone. It is Wednesday, August 8th, and this is Nadex Morning Analysis, where we look at some potential hotspots in the markets for the day. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple is Brian Caprice. Before we jump into it, I do need to quickly share this disclaimer that trading involves risk and may not be appropriate for everyone. Let's slow down a little bit. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything I say as a buy or sell recommendation, or Brian for that matter. We are doing this for your education purposes. So, what are we going to be talking about today? Well, first, we are going to be talking about crude oil again. We spoke about it yesterday. Uh, it actually had bottomed out right around then. Oil had seen a couple of large drops, and they were surprising. Really not sure why we were seeing these spikes down. Uh, the U.S. traders managed to push it back a bit yesterday, so oil did come back a little bit, stayed flat throughout the day. And what did the European traders do as soon as they got online? Sold it right back down. We do have the U.S. oil inventory report today at 10:30 this morning, 10:30 Eastern. So we are going to talk about oil. We're also going to talk about equity indices. They're all looking to open, I believe, slightly in the red right now, but we are again at near all-time highs. And then there's some interesting action going on with gold. Gold spiking higher. So we've got oil going lower and gold going higher. Rather interesting phenomenon. So, Brian, I'm going to flip it over to you, and let's get into it.
All right. All right. Yeah. So today is obviously Wednesday. We love Wednesdays because it's oil day. And again, it was also one of those mornings where we had high impact news at the same exact time. Right now, in the last 24 hours, currencies have not really moved a bunch. It's actually rather slow. Again, yesterday we talked about it, but today it's even slower at this point. We are kind of rolling out of the European session and bringing into the US session right now. So things are starting to reverse and kind of trend back a little bit. But for the most part, I mean, euro dollar is 2 pips different than what it was this time yesterday morning. Dollar Swiss -5, euro pound 11, pound yen, the big guy, is only down 11 pips. So really not a lot of movement right there. Um, Oil is one of the ones we mentioned today. And again, why we'll start off with oil today is because, again, oil inventory report, it's been absolutely crazy over the first 2 days. It dropped to $3.50 we had from the peak. Start off with that. The API report from last night came in at -8.78. And remember, the API is not necessarily as accurate as the EIA number. But again, coming in last time, it was kind of the same thing that, it was about double, right?
Right.
This time it's coming the same thing, but it's coming on the supply side of saying, "Hey, listen, the down draw is not really as big as you thought it was going to be." The forecast right now the EIA is coming out with is a -3.2, so you can see there's already a slight difference there. And what we've seen so far in oil is the price just starting to collapse. Now, you know, yesterday we talked about we needed to really find a bottom, and it was funny right there about 9 o'clock is where the bottom was. When we mentioned it. Again, somebody is magically listening. I don't know who it is, but they're listening, and they had the power to turn us around, and that was literally the bottom that we found there and took off. And we created an interesting top. I mean, really, at the end of the day yesterday, from about 11:30 to when the oil market closed, price just stopped. Right, it stopped. It kind of put a top in. It gave us that failure to go higher. There's that little red candle in there. I can zoom in so you guys can see a little bit better. There's that red candle. I mean, in reality, it should be more there, but you know, there's the there's the formation, there's the failure to go higher, and it really just kind of didn't do much, right? Kind of pulled back and went back and forth, and just kind of its natural rhythm, and that's what we've seen. Yesterday was the same thing, huge movement. We based basically for the
And
last 2 hours,
sideways.
and
Yeah.
then just sideways, and then bam, Europeans come in, U.S. session comes up, and yesterday was actually a big little situation where we kind of stayed within that range, and again, we mentioned it before. We keep having this pattern where we have one direction in the European session and then the opposite in the U.S. session, and yesterday was no different. Big, huge push down. We found that base right at the open, and then we pushed back up. While today we got big down again. Okay, so and again, a lot of this could be the EIA number. I'm sorry, the API number from yesterday rolling into the EIA. But a lot of times, what we see is when there's a really big price movement in one direction, unless we have a continued push, which it would kind of be strange if we have that big of a push because everybody now is expecting it to be lower. There is typically a retracement when on inventory days when the initial movement happens in the UK session. The US session tends not to be as much. It's kind of like all the oil traders got it all out of the way before the US got involved. So it's kind
So
of one of those things.
yeah,
And
pay
remember,
attention. 10:30 a.m. this morning Eastern. It could be some
yeah,
fun.
exactly. So, I would say, play it the same way we always do. Kind of see if we stabilize here at the open. Again, the fact that it's already down almost 1.5% since yesterday, people are going to see that. They're going to look at that. Anybody that wakes up is going to look at that forecast from yesterday, be like, "Oh man, it's negative. We need to get short this," which typically helps the price go higher. There is a level that we've looked at before, or that we've been mentioned before, is at 68.46. It is just a little bit lower. We're talking about 70 cents lower. It can absolutely move that 70 cents from now till news. That would be a nice area to bounce it off of. But the way that we typically play this and what's worked the best is really dive down there at about 10 o'clock, about half hour before the news release comes out. Start watching it on the lower time frames, the 5-minute charts, look for some stabilization, and then go in there. And again, some days it works out great, some days it doesn't as far as what asset is best to use. Some days the binaries just don't make sense because there's way too much premium jacked into them, and you have to kind of jump over and potentially find a knockout in there, or maybe even a shorter duration call spread in there, and you're waiting for kind of some big of a push. Just be cautious with it. Some days the premium is just a bit too high, and that happens when they pull from the volatility index to be able to price these out. And when I say by high, I mean like the spreads are really it's a wider spread, and it's you can go two strikes up and it's the exact same price, right?
Right.
So that's why
It's
you have to know all three
percentages.
products. Yeah, you
Right.
have to know all three products because typically you can find one that makes sense. Or again, maybe today you don't think it's going to be a bursty day because, as I mentioned, the big push down on inventory days tend to be a smaller day. Not always, but they tend to be a smaller day. So maybe if the premium's really, really high, today is one of those days where you look for it to kind of stay within a range. You take
Right.
advantage of the high volatility. So it's one of those things. There's not one strategy that works for everything. You got to see what it looks like at the time. And again, really, really high premium. See if we have some nice levels. I mean, price has already been turned around at 70.50. We know we got a little bump level lower, especially down at the 66.97. You take the grand scheme of things, you can see how far we've pulled back. And again, some of those fib traders that are looking at this on a daily basis, they're looking at this level saying, this is pretty attractive based off, again, if you know fibs from top to bottom, this is a pretty attractive level right here in the middle. So, there's a lot of different factors out there. I would say, again, if we had the same stabilization, this could go higher. But right now, again, the best thing to do is kind of see how the market is manipulating or controlling it before news. Drop it
Yep.
down to a 5-minute, and then start to see, is price stabilizing? Is it pulling back into one of those 30-minute zones? Where again, maybe the zone hasn't even formed yet where it's pulling back to. But it could be a 30-minute or a 5-minute zone.
Mentioning if you're not certain about how some of those um, binary spreads work. Uh, Dan Cook on Tuesday, I dropped a link in. We are doing how to day trade the stock market on Tuesday. Uh, a lot of what will be discussed will also apply to other asset classes. Dan Cook's actually going to be doing a set it and forget it strategy for binary options, exactly looking for either that breakout or that stay in strategy. Uh, Based upon what the volatilities, what the probabilities are, what you're seeing in those binary options, where uh, you could choose out of the money binary options up here and deep in the money ones down below, and you can actually put a spread on. If you're interested, you can join that session on Tuesday. And Brian's also talking about those Fibonacci levels. He's actually going to be doing a technical analysis session, I believe, right after Dan goes on Tuesday. So Tuesday could be an interesting day. Register, you'll get access to the recordings and the slide decks. And you can learn some of the things that Brian's talking about, whether it's some of those strategies with binary options or even some of this technical analysis. It'll be available. So coming up next week, which actually moves us to, I know you're going to be talking about using some of that technical analysis on the stock market. So you want to jump into equity indices real quickly?
Yeah, I was just trying to mark these off. And again, if price comes down, there is a knockout at 68.25.
Oh,
So if we
perfect.
do push down into this level, there is something. It's in the zone, so it tends to be a little bit riskier versus being on the other side.
Right.
But there is a knockout in there. So if this does maintain and hold, there may be because the knockouts tend to have less of the kind of volatility premium baked into them just by the way that they're established versus a buy
Well,
and
yeah,
hold
well,
cycle.
actually, knockouts are a true delta one. So there's no premium. You're actually trading the price of the underlying. So I think you're talking about this one right here. So
Can't see it, it's
yeah,
fiddle on my screen, but yeah, right down there. That looks about right. Yeah,
close.
the 68.25.
Yeah. So, yeah, so, if we do get a little bit more of a pullback and you're looking for a bounce when the number comes out, this knockout could be an interesting way to play it. All right, perfect. Thanks. Yeah, let's jump over and do some uh, indices quickly, and then we could touch on gold before we bounce.
Yeah, I would just say, I mean, obviously we had the ADP non-farm employment change number today. When it comes in half what the forecast was, not necessarily the best way to start off the morning. We have ISM services actually coming in at 10 o'clock as well. Yesterday I talked about having that potentially be a split. Like if non-farm looked good, watch it because if it excels the market up, ISM could come in and really kind of sandbag that really quickly and turn it around. And I think, ISM is expected to be higher. Um, Maybe today it's the negative then positive versus the positive then negative. But again, coming in less than half, that's kind of a big deal. And because of it right now, you can see, all the indices right now are basically sitting there in the red. ES, NQ, YM, and RTY. I would say it's not the best way to start off the morning. The interesting thing about it, if you look back, I mean, really since about 6:30 this morning, before the news even came out, prices were already starting to head back to the downside. Um, I would say, I mean, right now the Russell's going to be the most affected. Here's the Russell right now. This is going to look very, very complicated. You may say, "What the heck is this, Brian?" If you want to know what this is or how this is being used right now, this would be for next week's education seminar. I mentioned yesterday, if you guys were around for the midday session, I'm going to be going into technical analysis. Everybody loves fibs, how to use them. I'm doing something on Fibonacci retracements as well as extensions. And again, this is kind of combined with kind of what I use as well, as far as supply and demand. So this is going to look very, very complicated, but understand this is one of those things where it's a little bit more advanced technical analysis, and there was an interesting setup in this one that is pretty deep into profit. It's already actually hit one of the profit targets, and it's pretty close to the second one. But I would assume all these, YM I think is in an interesting situation. It came up and it played with that 35,000 a bunch. Touched it here again, and it's now started the rollover. And if we look from where we were yesterday, remember yesterday morning we had this big spike down, spike up right through that 34,687 level. And again, with a binary call spread, you were good. Knockout if you had something in here, you would have got to take an out on it. But right now, it kind of gives us some guidelines saying, we got a little bit of a little bit of buying occurring right here. That's approximately around. Here, I'll just take this one. Let's see, approximately 34,764. Right, and then we know we don't really have anybody until a little bit lower down here, sitting
Right.
down at this level where buyers stepped in. So there's kind of two downside targets today if this continues to kind of drop to the downside. Right. And again, if you look at it, I mean, there's one little hiccup here, but again, both those wicks came to the same exact spot, which for me means that there's really not a whole lot sitting there. So, with the negative news, if the media takes and runs with that, that could definitely keep them selling. So I would keep these two targets to the downside today. 34,764 and 34,620 to the downside. Gold also is going crazy,
What?
right?
Yeah. What
Gold
is
is
it?
going crazy.
To
Yeah,
the
gold took
moon.
off at about 7 o'clock. I mentioned this yesterday. It seems like gold is very aligned right now with the U.S. session. Whenever we've had any of these big pops or movement, I mean, this last big kind of spike up here that is sticking out is also a U.S. session move. You're seeing before that, there's not a lot. Same thing, not a lot here in the overnight, right? And then all of a sudden, the U.S. trader steps in and the U.S. trader brings it higher. It's very interesting. I'm not exactly sure why the U.S. market loves gold so much when the rest of the world doesn't necessarily care about it right now. But right now, we have a level sitting here at 1830. The last time we hit it, we bounced a few times, and you can see there was that nice little trade. And again, we were looking for the area, and it had a little bit of a hiccup, this 1822. But again, it was kind of a few different spikes up, and it's kind of running in there now. But we'll see. I think 1830 could be an interesting level. Obviously, when you're looking at gold, you're also looking at the dollar, and you can see that the dollar has done the same thing since about 4 o'clock this morning. It's being pushed down.
Yep.
Now the big question is, again, we're approaching that 9 o'clock hour. Is the U.S. trader going to step in now and say, no, 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 we're not doing weak dollar. We're doing strong dollar because that's how we roll. If they do, then gold should be turning over as well. And you can see we had that level in gold at 1830 up top, which could lead to a potential reversal back down again. as well as that coincides with the dollar, we also have a level just below that where buyers have stepped in and it's been tested to flip it back to the top side. So it's kind of setting up in an interesting way. I wouldn't say that right now the dollar and gold is really affecting currencies enough to be able to say, hey, this is everywhere. It
Right.
seems to be a pure inflation play. And, there's been some news talking about it. A couple of hours ago, 4 hours ago, the UK service sector recovery slows again in July. Again, COVID shut down, but it says while inflationary pressure hits, an all-time high, keeps running, right? So we're seeing inflationary pressure, even though the other kind of services and manufacturing, everything seems like it's pulling back, but inflationary pressure is continuing to build. And again, every time we say the I word, gold should go higher, and it's rightfully so. So it's an interesting setup. Like I said, I think the next 30 minutes are going to tell a lot about this one, whether the dollar index and, again, gold kind of start to roll. Like
Right.
I said, looking at this, I'll remove this trade from last week. You can see in this level here, I mean, there was a lot, right? There
Yep.
was a lot of stuff going on, a lot of chopping back and forth, a lot of chop back and forth. And then 8:30 in the morning, bam, it moved and dropped. So we're right there right now. The question is, do we have enough power to punch through it to grab some decent levels? And again, this 1830 was tested a few times, right? It's not the original level here, but again, nice push, and it let it all the way down. So is 1830 going to be the new top, or is it going to start stabilizing sideways and give us a base to go, up into the 1850 range?
Perfect. All right. With that, any questions for Nadex, please email us, customer service at nadex.com. Any questions for Brian, you can email him at support@keeptradingsimple.com. If you're catching this next Tuesday, we do have that boot camp. There might be some interesting sessions that you might want to catch, whether it's live or whether it's on demand afterwards at your convenience. Register, you'll get access to those recordings and the slide decks as well. As for today, what did we go over? We went over oil pushing lower again, and we've got that oil inventory report at 10:30 a.m. Eastern this morning. Uh, Equity indices all looking to be slightly lower this morning, but then we've got something really interesting going on between gold spiking higher and the U.S. dollar going lower. Uh, Waiting to see how the U.S. traders uh, take to that when they all come online here in a half hour. So we do have some volatile spots in the markets creating some opportunity. With that, Brian and I will catch you again tomorrow morning. We want to wish everyone good luck in the market.